Ladies and gentlemen, good day and welcome to the Q4 and FY22 conference call of Nirlon Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you and over to you, Mr. Anuj Sonpal.
The Investor Relations of Nirlon Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the fourth quarter and financial year ended 2022. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Rahul Sagar, Chief Executive Officer and Executive Director, Mr. Concall Sagar, Promoter and Non-Executive Director, Mr. Manish Parekh, Chief Financial Officer and Vice President of Finance, Mr. Jasmine Bhavsar, Company Secretary and Vice President of Legal and Compliance Officer, Mr. Ashish Baradia, Vice President of Business Development and Investor Relations, Nirlon Management Services Private Limited. Now, without any further delay, I request Mr. Concall Sagar to start with his opening remarks. Thank you, and over to you, sir.
Thanks, Anuj. Good afternoon, and welcome to our earnings conference call for the fourth quarter in the financial year ended 2022. We hope all of you are safe and well. Let us take you through the financial performance of the company for this period. For the fourth quarter of the financial year ended 2022, the company reported a total income of approximately 138 crores, an increase of 48% from the previous quarter, and EBITDA stood at 114 crores, an increase of 52% from the previous quarter. This represents an EBITDA margin of 82.43%, which increased by 224 basis points sequentially. Profit after tax stood at 37 crores, representing a PAT margin of 26.94%. For the financial year ended March 22, the company reported a total income of approximately 387 crores, an increase of 21% from the previous financial year, and EBITDA 100 crores, representing an EBITDA margin of 77.63%. PAT stood at 111 crores, representing a profit after tax margin of 28.65%. As mentioned in our presentation, during the year ended 31st March 2022, the company completed the development of Phase 5 at Nirlon Knowledge Park and licensed the entire Phase 5 development comprising 1.16 million square feet of chargeable area with effect from December 15, 2021 to JP Morgan Services India Private Limited for a period of 10 years. JP Morgan is paying license fees as per the agreement from 15th May 2022 as contracted. Accordingly, income and expenses relating to Phase 5 are recognized in the profit and loss account with effect from 15th of December 2021. This is the primary reason for the increase in license fees and profitability in the fourth quarter. The overall occupancy rate of Nirlon Knowledge Park, including Phase 5, has increased to approximately 98% in this quarter compared to 95% in the previous quarter. Of the area that was vacant earlier, JP Morgan licensed an additional 13,000 square feet at NKP, and two clients licensed approximately 4,800 square feet at Nirlon House, of which 75%, i.e. 3,600 square feet, is Nirlon share. Separately, Barclays has renewed approximately 63,000 square feet in May 2022 of the space due for renewal expiry in financial year 23 in NKP. As on 31st March 22, approximately 65,000 square feet or approximately 2% of the area was vacant. Of this vacant area, the company has licensed approximately 7,500 square feet, in quarter 1 financial year 23 and is in discussion for the balance area. On the 2nd of May 2022, the company refinanced its entire debt and availed a green loan facility from HSBC for 1,230 crores, including an OD sublimit of 80 crores. This new facility is for a tenure of 10 years with a principal moratorium for the first 5 years and the bullet repayment of 75% at the end of the 10th year. As of today, the interest rate applicable is 6.6% on the OD facility and 6.1% for the balance facility. The company had paid an interim dividend of 15 rupees per share for financial year 21-22 in quarter 4 financial year 22. Additionally, the board has recommended a final dividend of 11 rupees per share for the financial year 21-22, subject to approval of shareholders in the forthcoming AGM. As mentioned on earlier calls, this is in keeping with our practice of ensuring the maximum amount of surplus cash is regularly paid out to investors while ensuring a prudent level of liquidity is available for contingencies. With this, we conclude our presentation and open the floor to questions. Please go ahead.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you like to withdraw your question from the queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Dilip A. Jain, an investor. Please go ahead.
Good afternoon, sir. Am I audible?
Yes.
Congratulations on an excellent set of numbers and the announcement of the final dividend. Sir, we have stated in previous con calls that we would like to maintain a stable dividend policy. Having paid rupees 26 per share as total dividend in the current fiscal year, do we intend to maintain a stable dividend payout in the future, given that the circumstances are normal? So my second question is, as you have mentioned earlier in the earlier con calls, that a one location asset containing REIT structure may not be possible from a regulatory standpoint. So therefore, in case we decide to diversify into different real estate classes, I would like to just mention that various real estate classes globally give returns in the low single digit to mid-teens. So my question to you is, are we open to real estate fields which give higher rental yields than the office real estate portfolio? Thank you very much, sir. I look forward to your responses.
So, Mr. Jain will answer your first question, which is on the dividend sustainability, I think it was.
Yes, sir.
Yes, so we believe that the level of dividend that we've paid for this year is a sustainable dividend for us going forward. We estimate for the next 2 years that this is a sustainable dividend that we should be able to pay.
Excellent, sir. Very nice.
Okay, thank you. The second question, we didn't fully understand. Are you saying that would we like to move out of a class of real estate that is not office anymore? Is that what you are suggesting?
Yes, sir. There are other real estate classes globally. For example, there are data center REITs. There are various other classes which which give a yield which is probably low single digit to mid-teen. So are we open to diversifying into them in the future?
We are not presently looking at doing any other class of development in Nirlon other than an office development at the moment.
Okay, so you had mentioned earlier, sir, that from a regulatory standpoint, a one location asset containing REIT structure may not be possible. Do we have any information on where do we stand on that particular point as far as the REIT conversion, if at all it were to take place in the future?
So we have more information. The one location aspect is not the defining characteristic in terms of whether one will move towards the REIT or any other restructuring. That is one of the points, but that's the point that we believe would be a secondary point rather than one of the primary points. I think we mentioned last time, the larger issues are that there's no, in fact, the so-called conversion to a REIT is not something that is a regulatory possibility. It's not just possible to convert to a REIT. As we had explained last time, there's a convergence of various regulations and various people that need to come together for this. So, our understanding so far is that a listed entity can theoretically become an SPV under a REIT, which is also a listed entity. However, there are no precedents or no ready framework for this particular circumstance at the moment. So due to these considerations, in the absence of any specific approval or any specific exemption, there may be a situation where it may be desirable or required. In fact, if the company is to a transition to a REIT, would do it in two steps which may involve either an open offer or a delisting, and then move towards the REIT. If in fact that is the direction that one decides to take. As we had said last time, this is a set of discussions that is ongoing at our end, and we have a lot of significant feedback on that, which we will take into consideration before we take any final decision on the matter.
Very nice, sir. Thanks a lot. Thank you for the response. Thank you. All the best.
Thank you. Thank you.
Thank you. Ladies and gentlemen, if you would like to ask a question, please press *1 on your telephone keypad. Our next question is from the line of Harshit Golecha, an investor. Please go ahead. Harshit Golecha has left the question queue. We will now take the question from the line of Gaurav Jain with Spark Capital Advisors India Private Limited. Please go ahead.
Yeah, thank you. Thank you, sir, for the opportunity to ask the question, and congratulations on a good set of numbers. My question pertains to the rental increase that one has witnessed over the past 1 year, and I must compliment that you have given a very clear chart of how much renewal you expect over the years for Nirlon. So on that, is there a broad rental increase that we are looking at in percentage terms on per square feet per month basis? And I ask this question in the context of competing office space nearby Nirlon in the form of Commerce 2, Nesco, and some of these other developments.
So Gaurav, there are a couple of reasons for the increase in the license fees between FY21 and 22. Okay, no doubt there has been escalations have come through from the existing phases, phase 1, 2, 3, and 4. Okay, there have been some occupants, there have been some vacancies which have been filled as well over the course of the fiscal year 21-22. However, if you look at the Ind AS numbers, JP Morgan has rent would have started from December 2015, where the rent would start to be declined as per Ind AS. So that is another reason, and probably a very significant reason as to the increase in the rentals between FY 2021 and 21-22. That would really be it. So basically, consistency in the escalations coming through there's a marginal reduction in the vacancies, and then of course the straight lining of the JP Morgan rent from December 15, 2021. Does that answer your question?
Just if I can be more specific here in asking, in terms of increase, are we looking at a 10 to 15% increase in rentals over say 21 on per square feet per month basis? Is that a fair assessment?
I think the increase in the rentals per square feet between in 2021 and 21-22 would not be significant to the extent of 10%, whereby there may be a few marginal increases. I don't think it would be as significant as 10%.
Got it. And is it fair to assume, sir, that this number will be...
Speaking of the new rentals, I'm speaking of the new... I'm speaking of new rentals. Of course, the escalations have come in, have kicked in as per schedule.
Got it. And is it fair to assume, sir, given the competition around you, a rental increase would be like mid-single digit? Is that a fair assessment?
Rental increase would be mid-single digit for what?
For renewals, like whenever they are coming up?
That's a tough question, really. Rental increase, there are a lot of factors that constitute that sort of.
Sure, no problem.
So I would not want to make a clear. I would not want to comment on the fact whether a rental increase would be mid-single digits for renewals or for new legal license for that matter.
Well, it depends on what level the previous license has expired at.
Also.
Okay. And so sometimes you may get something that is more than what you're saying significantly, and sometimes you may not get that level because you're starting at a base that's different. So, as Rahul said, that's an individual specific situation that occurs. So one want to generalize on that.
Sure. And lastly, sir, now that everything is sort of leased out, less than 2% or around 2% vacancy, how do we think about growth for Nirlon assets going forward?
Well, the growth will of course come in for a company like ours at this point where no additional or further construction is envisaged. The growth would come from consistent occupancy rates and minimum vacancy over a consistent period of time, as has been the case predominantly over the past 10 years approximately. And of course growth would come with consistent escalations in rentals, which have also been occurring over the past approximately 10 years, etc. And thirdly, a very significant part of growth, which of course we cannot specifically comment on now, would be if the actual rate per square foot, so to speak, shows a steady and a consistent upward trend. But of course, on the third point, it's not so easy for us to make a specific comment right now.
Sure,
that
sir.
would predominantly be the driver of growth in the top line, and of course that would be the most significant factor for overall growth in the P&L.
Sure. And just sir, lastly, as we stand today, is our offices working at 100% capacity? In Nirlon?
Yeah, that's a good question, Gaurav. That's a good question. So we see a steady increase of people coming into the campus. Of course, this is something which we monitor very closely. And I'd like to say that based on the first 4 phases, apart from JP Morgan, of course, because that's still in the fit-out stage, we see that we are approximately around the halfway mark in terms of the number of people coming in. We see approximately 50% of the pre-COVID volume of people entering the campus every day. So that's extremely important, and that's something which we look at, and we'd be very happy to see further people coming into the campus. But I say at this point in time, we are approximately the 50% mark.
Yeah, we've been very encouraged since our last call that the occupancy has gone up significantly. As Rahul said, between 50, sometimes close to 60%, and we do see that trend continuing to go up. So that's something we're very encouraged with.
Sure. Thank you so much, sir, and all the very best for
Thank
you.
Thank you.
Thank you. Our next question is from the line of Neeraj Manasinka with White Pine Investment Management. Please go ahead.
Yeah, thank you. This call, Rahul. A few questions. One, JP Morgan took additional 13,000 square feet from you. Was it a similar or is it slightly premium or a discount?
You're a little bit
Are you asking that the 13,000 square feet that has been taken by JP Morgan additional, is that at a premium or a discount?
Yeah.
So
I think it's pretty much at the same rate.
Okay. And the Barclays set was renewed. So obviously there would be an escalation because the renewals have come in. So can you give a color on their renewal rates? Like, is it at a, again, like, okay, the question here I'm trying to gauge it as, since you have contracted JP Morgan, which was some years back, 2 years or 3 years back, the rates might have gone up or gone down. Just wanted to understand because currently the occupancy is increasing, and there's also some amount of positive side in the business. So wanted to know the rates for the Barclays. What is the current rate for the market, and what was the research for Barclays? What rate was it done?
So your question is what rate has Barclays renewed at?
Is it higher or lower than the earlier rate?
Yeah. Well, I mean, there's
not really with regard to Barclays earlier one, with regard to, we can say JP Morgan as a benchmark. I think that would be a better way.
Yeah. So with regard to JP Morgan as a benchmark, we'd say the Barclays rate is, if you compare it, is fairly similar to the JP Morgan rate. We say it's very close around the JP Morgan rate if you compare it on a like-to-like basis,
Okay. No, the reason I'm asking is, see, there has been this development here, the metro stations are coming. There's a huge gap still between BKC in your area. Still, the rental rates are not going up. So I wanted to get your color on that side also.
Yeah, that's a good question, but one must also understand that apart from the micro market in Goregaon and apart from BKC, the profile of the licensee we have are very strong real estate clients are very strong licensees for any developer or developers. And all these licensees have a very strong footprint in Pune and in Bangalore, etc. as well. So one needs to also take into account that the talent pool of employees accessible to these licensees in Pune and Bangalore is very significant and is very good. And so the competition for NKP, apart from the micro market, and of course, yes, we always think that the prices should increase more compared to BKC. But based on the profile of the space, which is basically the larger floor plates of 30,000 and 40,000 and sometimes even more, there is a very serious competition, or there is a very serious space being offered in Pune and in Bangalore, just to name two spaces where the talent pool available to this profile of licensee is very decent.
No, I understand this. I just wanted to push further here in a thought on, maybe we can get more understanding on that. See, the capital cost of making a property has gone up. The land prices have also gone up in the last 5 years. So effectively, a new guy building a property would get a lower yield than he would have got, say, 5 or 10 years back. So don't you think that the lucrativeness of making a commercial property has gone down, and hence the rates are bound to go up? So and it's not going up. So still want more color. or do you see that until the occupancy of the region completes, then only you will see a possibility of some industry rate hikes?
So, Neeraj, rather than speculate that way, let's look at what we've been seeing and what's been happening, right? We've come out of 2 years of COVID. There's been no there's been nothing negative that has happened in that time. If anything, there have been various positive developments that we've had in terms of leasing as well as in terms of rates. We haven't had anything that is negative or anything before that. Also, the kind of transactions that we are doing now are incrementally, the trend is an upward trend and it's not a downward trend. Now, whether that is, one doesn't want to be subjective about it as to whether that's good or bad. We've been quite encouraged by, given the way the last 2 years have gone and given where we are now, the kind of inquiries that we have and the kind of rates that we are licensing at are certainly higher than what they were earlier. And to that extent, it's been something that is quite positive in our view. Does that better answer your question?
Yeah, it gives a color on the direction. The last question, I want to know on the, you have given a discussion on the, how the monetization will happen for investors. Now, can you share, you said about it, can you give more color on what is the point of stumble and where is the decision getting stopped, and for say maybe converting to a REIT or merging to another REIT. So just wanted to know your thought that where are the decision making getting stumbled, or where are the points where discussion is still to happen?
Sorry, your line is not the clearest line, but from what we understand, again, I think you're once again asking where we are in terms of
the decision making
towards the restructuring or a REIT or something along those lines. Is that what you're asking?
Yes, and more color rather than just we are thinking about it.
So I think we did offer more color the last time, and I think we did offer more color this time as well, right? There are, as you'll be well aware, a REIT or a restructuring decision that is like a REIT is something that is going to involve considerably more than just the company and Rahul and me sitting here just now. It will involve the sponsors, other shareholders, so many other people and so many other issues. So we did mention there, and I think quite clearly that we had made significant progress in terms of understanding the way, one of the discussions we've been having is the way towards the REIT as far as Nirlon goes, as far as the regulatory aspect goes. And there, as I mentioned, we have made significant progress in understanding that in terms of whether as a listed entity, Nirlon can be owned by another listed entity, which would be a REIT, or what would be required to put Nirlon in a structure where it could fit into a REIT. And I think there's been significant progress in terms of our understanding. The decision making post the understanding will have many other people and many other parties that are involved. And that's something that will play out over the course of the next few quarters. And that's something that, I think that's as far as one can, there's nothing that is stuck anywhere. It's a process that is moving forward. And since it's a process that will effectively be happening for the first time in terms of a listed entity trying to transition to a REIT, it will naturally be looked at very carefully and scrutinized from all sides to see whether that is in fact beneficial to the shareholders or not at the end of the day. So we don't want to make any commitment beforehand, and it is not something that unfortunately we can answer just for the sake of answering. It's a long, detailed process which is being undertaken for the first time. So I hope that does give you some more color. It's not, again, we're not saying we're thinking about it. We're saying we're doing a lot more than thinking about it.
Okay. So just, I don't comment, just wanted to give my feedback that, see what's happening is that you are also not moving to the new tax structure because you don't know how it will be required for if you convert to REIT. So effectively, the decision making is a cash flow loss to the minorities also. I know it's cash flow loss even to the majority shareholders, but it's also cash flow loss to the minority shareholders. And so just a suggestion that at least to the majority shareholders should think slightly to quicken the decision rather than the place at which it's happening right now. So that's just a feedback I wanted to give to you. Yeah, that's all.
Your feedback is much appreciated, and it's appreciated. Yeah, please do. I hope that we want to say that it's something that we are extremely cognizant of. The only point we would like to make to you is that the migration to the new regime, as you know, is not a reversible one.
Yeah.
And based on the data we have, if we allow and retain our flexibility now for any future restructuring, and if we continue with the old tax regime, we estimate that the potential value of such an event is significant enough to stay in the old tax regime and to keep this option open now. We are not saying that that's something we are going to do for the next 5 years or for the next 10 years or for the next 3 years. We are saying for the present, for this year at least, staying under the old tax regime will allow us the flexibility to do something that could be much more significant. And if it isn't, yes, there will certainly be a small cash flow loss to all shareholders. But we do believe that the potential value is not something that we should just close the door on, and we should make sure that we explore every avenue in that regard to try and maximize that value. So we understand your point of view, and we understand what you're saying. It's something that we are extremely cognizant of, and we agree with you fully on that.
Yeah. Okay. Thank you very much for your patience. Yeah.
Thank you.
Okay.
Thank you. Our next question is from the line of Laksh Jain, an investor. Please go ahead.
Hello, am I audible?
Yes.
Yeah, very big congratulations to the Nirlon team for great set of numbers.
Thank you.
I have a couple of questions. My first question. What are the current rates going on in Goregaon for A-grade office spaces like NKP, the per square feet cost?
Okay. So essentially, we don't want to we say what the rates are in the other developments in and around the micro market. As you can see, the rates, I mean, according to us, and rates in NKP would be approximately in the mid 140s, so to speak. Yeah, that's what we think the approximate rates are.
You're talking about the rental part, right? 140.
Yeah.
And about land, like in general, I'm not rent. I'm talking about land.
About land?
Land in the sense the square feet. Yeah, we have 50 lakh square feet, right? 5 million.
Sorry?
With carpet area of 30 lakhs.
We have now.
We would want to look at the land valuation in our context.
Yeah.
It's a finished asset.
Yeah, I'm just correcting that. We have like 30 lakhs carpet area, right?
Yeah, chargeable.
Yes. And I'm talking like, how much will it be like if it's on sale, like 30 lakhs is, you're getting my question, right? Like for 30 lakhs, how much?
Yeah, what is the rate per square foot if you want to sell it?
Yes.
We don't really want to comment on that because we've not really examined that, we've not looked at it. So it would not be absolutely appropriate for us to answer that question without doing a lot of homework and understanding that because it's not so far something.
Our valuation, like any other company in our profile, would be more on a cap rate and rental basis.
Yeah, exactly.
It's unlikely to the cost per square foot of office space is not likely to be something that will be a realistic valuation one way or the other. Ours would be done on the more traditional basis for any rental asset or any yield asset.
Okay. No, the reason why I asked this question is because we'll get an idea if at all REIT materializes.
Sorry, you get an idea?
If at all REIT materializes, we get the valuation like that.
Well, again, I think we'd want to, if you're looking at valuations, we would be comfortable looking at the more, at the cap rate / rental valuation models rather than anything else, whether it's for a REIT or whatever it's for, because we think that is the more realistic and the more relevant one in this case.
Okay. And my last question. Given the size of Nirlon, the loan of what we have right now is very small. So do we have the options open for acquisitions? Because when another investor asked about growth, we were focusing on incremental rental and not on acquisition.
Well, I mean, at this point in time, we have not, as we have answered on the earlier calls as well, that there are no plans for any further growth or further construction within the NKP campus or outside in greenfield, etc., brownfield or something of that nature. So we can't really, So in that context, we see no reason at this point why the debt should be increased.
Okay. Thank you so much. These are my questions.
Thank you.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star and 1 on your telephone keypad. Our next question is from the line of Neeraj Mansinka with White Pine Investment Management. Please go ahead.
Yeah. Last question, Rahul. Just wanted to know, how do you see the cash flows? I think the dividend is good that they have paid out. Just wondering how much cash would be left after paying dividends, and if you pay the same dividend next year, how do you see the dividend payout? Okay, how do you see the dividend payout next year as well?
Neeraj, we don't want to offer any kind of specific guidance in terms of what it will be next year. What we will say is that the fourth quarter results should be, on an estimated basis, reasonably representative of what we should be able to look at in the coming year. Does that help you in terms of answering your question?
Yeah. Okay. Thank you.
Because we do think that the fourth quarter has been quite representative of what we might have, or what we estimate should be there going forward.
Okay. The only reason I asked you was that the amount of dividend which is commendable, you are saying, is much higher than the run rate of earnings today. So that's why I was asking you.
So as you said, that we do think that this is a sustainable level of dividend for going forward for the next 2 years. And it's on that basis that we confirmed that in the earlier, I think another investor had asked that question earlier. We did confirm that it is something we estimate to be sustainable going forward.
Okay, great. Thank you.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star 1 on your telephone keypad. Ladies and gentlemen, if you would like to ask a question, please press star 1 on your telephone keypad. As there are no further questions, I would now like to hand the conference over to Mr. Kunal Sagar from Nirlon Limited for closing comments.
Thank you all very much once again for attending the call. We appreciate your time and your questions as always. If there's anything at all that you need further, please be in touch with us, and we'll try and as best to make sure that we answer your queries or any clarifications as soon as possible. Thanks again. All the best.
Thank you. On behalf of Nirlon Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.